Let's review an insurance name that's quietly outperformed this year. I'm Jill Malandrino with the Streets Options Profits.
And I'm Scott Redler, Chief Strategic Officer of T3Live.com.
We typically don't talk about these big insurers, but I want to review Aetna today, ticker AET. It's trading at 9 times. It's expected to grow its earnings, has enough cash on hand to cover its debt. So fundamentally, it looks really healthy as per the balance sheet.
Yeah, and I'll tell you, I've never looked at the stock, or I haven't traded it recently, but I look at it technically, and I'm like, why haven't I traded this thing? You know, it's performed very well technically, and fundamentally, it's a name you know, and it's at such a PE of what would you say, below 10?
9 and forward is 8 times.
There you go. So look at the chart here. Look what I look at. You know, at this point, look at this uptrend that Aetna's followed. You had the low here in October. You know, came back and retested it after a nice move to about 42. Came back to resistance again, retested it again, and then look at last week. Last week you had the Santa Claus rally, 4 up days. It took Aetna along with it, and it pushed through some massive resistance that's tough to get through, and it powered through it. So at this point, you know, if I did buy this, which I didn't, I probably would have sold some into Friday, you know, hoping to get maybe a retest of this 42 area, and then if it could successfully retest 42, there's no reason why this thing can't see higher prices. You have it above resistance, you have it above all the moving averages. You know, fundamentally, sounds good. So at this point, it's in the game for 2012.
So we're going to take a look at a new strategy in options profits today. Typically, we trade vertical spreads or calendar spreads. We're going to do what's called a ratio married put, and Skip Rashi is going to give us the more detailed explanation. But essentially, you're delta neutral, positive gamma. You're going to be buying more puts than you're long the underlying, which helps you navigate through more tricky market volatility, which we expect in Q1, and you're controlling your risk, which is what we really try and portray as much as we can on options profits. So it's, you know, something new for us to look at, and we'll see how it plays out.
Yeah, a different name in a different sector, so you can be more prepared with just the usuals.
Okay, great. Thank you, Scott.